Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie.
And I'm Brittany Umar, and together we bring you Morning Call. So our futures are higher this morning on hopes we'll finally get a budget deal resolution. However, Fitch last night issued a credit rating warning about the U.S. credit rating. If we got a downgrade of that, John, that would be pretty bad for us.
Yeah, I think everyone's pretty surprised to see futures higher this morning after that Fitch warning, but I think, as someone said on Twitter yesterday, I liked the analogy that it's sort of like your drunk uncle at Thanksgiving, is that the first couple times you're sort of aghast and you're saying, what are you doing? This is crazy. But then after a few times you sort of get used to it. And I think investors right now are used to this procrastination, this high stakes game of chicken that Congress is playing with the budget, with the debt ceiling situation. And I think they thought this thing by Fitch was a little bit contrived. Maybe the Treasury came out with a statement right after the Fitch warning, basically saying, oh, look what will happen if we default, sort of trying to pressure perhaps some of those fringe people of Congress in the House of Representatives in particular into supporting a more moderate deal and kicking this can at least a few months down the road in terms of the debt ceiling. So I think most people sort of are brushing this off, but obviously that doesn't mean that a default wouldn't be a big deal. A default would be a huge deal, would have huge ramifications for the United States, for the world economy, and I think most reasonable people in Congress, besides the loony bin, realize that we need to raise the debt ceiling, but there could be some increased jitters over the next 48 hours to see if we get the deal done finally.
Right. At the moment, it looks as though markets are betting that we will not default, but as we start to hear more about the negotiations today, what are the levels that we should be watching? You
go ahead and take a look at the chart of the spiders. As you can see, yesterday we gave back some of those gains from Monday, but we didn't give back all the gains. We held above the 8 and 21-day moving average. So after a strong 4-day rally, not the worst thing in the world to see a little bit of downside action, a little bit of downward probing after we had extended away from the 8 and 21-day moving averages. And like I said, we're higher this morning. So what you can do in those situations on a short-term basis, if you're taking a short-term approach with all these headlines in the way, you just use yesterday's low as your potential out on a long position, or you could use the 8-day moving average, which is close by, and then on a trigger you could just use previous day's high. That yesterday was 171.15, so futures are up very mildly. We're not really that close to the previous day's high, but something to keep an eye on.
Well, most people seem to doubt that a default is possible, and if you take a look at gold, it looks like it doesn't believe a default is possible either, but if, say, we do, we could see a rush to this safe haven.
Yeah, there's a group of assets that I'm looking at to get any indications that some smarter money believes that a default is a realistic possibility. And yes, you've gotten some voices in the media. You had a Fidelity analyst come out and they sold all their bonds that were dated in November, December. Sort of an extreme move that had a lot of people scratching their heads a little bit, and maybe put people on alert that there are some respected voices in the media, in the finance world, that think there is a possibility of a default. But in general, you take a look at the chart of GLD. GLD is not telling you that smart money thinks there's going to be a default. Gold has been trickling lower. If people thought that a default was a strong possibility or even a decent possibility, gold would, I think, have broken this downtrend, would be a lot stronger as a safe haven. But we've continued to see gold trickle lower. On Monday it opened well higher on the surprise that we didn't iron out the deal over the weekend, but then traded lower during the session. Yesterday it continued lower in the pre-market, but then was able to bounce as there was more squabbling in Congress. And then today we'll look at the 5-minute, 24-hour of gold. It looks like it's set to open 123.50. So you look at the daily chart, a little bit lower than it closed yesterday. So most people seem to feel that we're still going to get a deal done by Thursday's deadline, and that's what gold is telling you.
Right. What about bonds? We've seen a TLT continue to show weakness as interest rates have been rising, but if we get a default there, that could change.
Yeah, bonds are another situation where if people thought that default was a realistic possibility, bond yields would be screaming higher. Our borrowing costs would go up a ton. You take a look at the chart of GLD. Yes, bonds have been a little bit weak, aka bond yields have been rising slightly over the past few sessions as the stock market has been rallying, but nothing screaming. Well off the lows is the TLT bonds, well off their highs of the year. So not something that's screaming default right now, but it'll be interesting to see if this drags on during the day today. what the reaction from bonds would be. So gold and bonds are two areas to watch, two areas that are telling me right now that I don't think a default is coming, but something interesting to watch today.
Make that 3 areas because the dollar caught some bids yesterday, and that would be an area that obviously would fall if we got a default.
Yeah, the dollar, one of the big worries about a potential default is that the dollar would be in danger of being discarded as the world reserve currency. And people would buy gold, people would buy other currencies due to the fact that the dollar was not as stable as it was in the past. But the dollar, if you take a look at the chart of the UUP dollar index, dollar was very strong yesterday, back above its 21-day moving average. Nothing there to indicate that people think a default is likely, and nothing to indicate that people think the dollar is going to fall by the wayside.
And utilities, another example that investors are not turning to defensive plays. The XLU slipped 1.4% yesterday.
Yeah, exactly. XLU is another area I've been watching to gauge whether or not we're getting that flight to safety. And we had seen that over the course of the past couple weeks, but then on Monday it was very weak during the session. The XLU closed well off its lows, but then yesterday continued to the downside, broke the previous day's low. So it's a sign that investors are perhaps looking to get back into a little bit riskier type of equities rather than pile into these dividend-oriented defensive sectors like the utilities.
All right, well, coming up, we're going to go in the trenches with some oil services companies, where we're seeing some nice action. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with some oil services companies where we're seeing some nice action these days. But let's start first with oil, which did have a nice digestion period yesterday after a 3-day rally.
Yeah, the oil service ETF, the OIH, you can go and take a look at the chart while we talk about it. Sort of under the radar to me is the strength that we've seen in the OIH. You look at the uptrend. This was a weak area for periods of 2013, but it has held a nice uptrend, and then it's gotten back to highs recently. Above the 8 and 21-day moving averages, really nice igniting bar on Monday. Yesterday, a little bit of a candlestick of indecision, but it held up a little bit better than the market. And the ETF as a whole shows the health in the sector, and I think there are some individual names that you could potentially capture even more alpha from.
Now, would you say that Schlumberger would be one of them, because we have that one hovering at highs after a nice breakout? Is there still more upside action here?
Well, thank you for asking, Brittany, because I do think Schlumberger could be one. You read my mind there. You'd think we had a script or something. But Schlumberger is one that I really like, one of the bigger components in the OIH. Above the 8 and 21-day moving average, really nice igniting move on Monday after the lower open. Yesterday, a doji candlestick, even more clean doji than we saw in the OIH, but held above that previous breakout point, one that we've been listing on off the charts that I think definitely could potentially go higher. Nice uptrend in place since late August, so definitely want to keep an eye on there.
How about EOG Resources? I know I'm keeping you on your toes here, but this one is also holding higher.
EOG's perhaps been even stronger. It's another one we've been listing on off the charts, another one in the group. Had a nice breakout last week to new highs. During that market, we had that lower open on Monday. EOG was able to get back to the previous day's high. Then yesterday, it actually pushed above it before closing back below and putting in a similar candle to many stocks we saw yesterday as the macro environment sort of dictated the action in a lot of stocks yesterday. But it's another one that perhaps it needs some sideways action, some rest to allow this 8-day moving average to come support the stock, to come catch up. But one that I do think could get more upside given the technical strength.
And Anadarko trading above all key moving averages. This one's inching into resistance. Do you think it'll have enough power to break through it? This
is one that's been a little bit weaker, and it's sort of like I talked about the last couple of days with something like MGM in the casino group, is that you've seen other names in the group breaking out, and Anadarko is one that the pattern is still intact, but how do you interpret that relative weakness? Do you say this is one that still has some energy, some room to go, or do you say that this relative weakness is a little bit of a red flag? And the answer is you just gauge the price action based on pivot areas that you watch. So you're just going to watch, for example, on Anadarko Petroleum, you're going to watch yesterday's high, which was 96.68. You're going to watch this pivot from back in September, which was 96.75. Those are levels that if it does break above it, you potentially trigger a long trade, and then you put your stops at a calculated level depending on what your reward is, what your target is. And you always want to have at least 2-to-1 risk reward on these trades. So say that you play Anadarko Petroleum on a breakout above 96.68. Let's zoom out to the weekly chart, potential targets, nothing really to the left of the stock. We'll see monthly if there's anything in the way. Nothing in the way for Anadarko. So your target's a little bit arbitrary, but you could place your stop here around the 21-day moving average or 8-day moving average, even around 95. You have about $2 of risk. Then you look for about a $4 move, so that would take you near the $100 area for Anadarko Petroleum. That's how you construct a trade setup. That's how you manage risk reward on every single trade idea.
Right, and not necessarily meaning you should be playing all of these, but
No,
pick one
you
or
don't
two
have to.
where you feel the most comfortable with the price action and where you understand the chart the most.
If you have a long-term portfolio, obviously diversification is very important. So I think what you do is you pick a stock that has the best combination of technicals and fundamentals, and that's your oil service name in your portfolio. If you're a short-term trader, you want to be trading the stocks that are moving the best. So when we do these sector spotlights in the morning call, that doesn't mean you buy every single one of them. I think I do like EOG and Schlumberger a little bit better than Anadarko Petroleum, but I was just highlighting an example of how you can potentially construct risk-reward scenarios in every trade idea, which is something we're doing on Off the Charts a lot more explicitly now with the new version that launched yesterday.
Right. Well, let's get in one more name. We have Devon Energy, which is also holding above the 8 and 21 day.
Devon, Devon's also a name that has broken out and been able to shrug off a little bit of the market volatility and turmoil. You also take a look at the chart there. It actually is a little bit of a lower level pattern that looks like it could be breaking above some resistance. You see the 8 and 21 month moving averages curling up. We're on the monthly time frame here, coming into some pivots from earlier this year. You have this high at 61.10 that could come into play today or over the next few sessions, and then from February, you have 61.80 as another pivot. So those are two areas to watch in Devon. You go back to the daily chart, you can see it broke above the most recent pivot. So nice action there as well. Among the group, I like Schlumberger, EOG, and Devon better than I like Anadarko.
All right, let's do some quick hits here. Let's talk Apple, where upside momentum has been slowing a little bit. It did manage to finish in the green yesterday, but we have that October 22nd event where a lot of people are expecting new iPads, so maybe that momentum could potentially pick up in the near future.
Love the iPad. I think they'll probably come out with a nice product there on October 22nd. But the price action is what we watch, and the price action has generally been good in Apple. It's been a little bit lethargic. It hasn't really gotten the momentum above that descending trend line. You take a look at the chart. We've been highlighting this sort of wedge pattern that's been forming in the stock. It has broken above this downtrend line, but hasn't really gotten, like I said, the momentum that sometimes people look for on a break of a trend like that. But it is higher this morning. Apple's up around 501 this morning, so you go back and look at the daily chart. Yesterday's high was 502 even, so that's an area to watch to see if when it breaks above, if it breaks above yesterday's high, whether we get some more momentum and see Apple trade back here to near pivot highs from early August around the 510 plus area.
All right, and Yahoo, we know, reported earnings after the close yesterday, saw a drop in revenue and earnings, but it's a deal with Alibaba, had the stock up after hours, and it is up again this morning. What would you watch here?
Yeah, most of the rally that we've seen in Yahoo over the course of September was the result of the fact that they have a big stake in Alibaba, the big Chinese e-commerce site that is set to IPO in the near future. The fundamentals of the stock and the earnings haven't been explosive since Marissa Mayer came on board, but the combination of sort of a culture change at Yahoo and the Alibaba hype has allowed the stock to push higher. Take a look at the chart. Basically what you got in last night's earnings report is you got a very decent, mediocre type of report. It wasn't enough to push the stock higher, especially at current price levels. They had some decent mobile numbers and stuff like that, which is the magic word, but the big thing that pushed them higher was they announced an agreement in terms of how many shares of Alibaba they're going to sell to the public in the IPO, which is going to net them a large amount of cash to further their endeavors. And you take a look at the 5-minute, 24-hour chart of Yahoo. It's right now around 34, so not really extreme damage there. Or not really extreme strength this morning. It's still going to be within yesterday's candlestick, and it's weakened a little bit before the open, but something to keep an eye on. It'll be back above its 8-day moving average. Perhaps you get some increased buzz about the Alibaba IPO that could push Yahoo back to pivot highs there around 35.
And some solar stocks yesterday met sellers during this session, but we saw Trina and Yingli Green Energy both hold higher, so showing relative strength, these could be ones to look at in the group.
Yeah, we focused on the solars in the sector spotlight yesterday, and I just didn't want to have you lose focus of that sector. We didn't want to cover them again in sector spotlight, but I think you should continue to keep an eye on them, because something that we've talked about before, we talked about it with Whole Foods Market when it last week tried to break out, or a couple weeks ago tried to break out, but put in a breakout failure, is that you have to judge every stock's move in the context of the broader market. That's what top-down technical analysis is. So you take a look at something like a TSL. Yesterday I tweeted about how the solars were showing really nice strength in the morning, but we got sort of breakout failures. They didn't close terribly negative or anything like that, but you saw sort of mini breakout failures. But what I would say is that the broader market weakness weighed on these. The macro environment is taking a large precedent right now. And I think when this deal gets done, which I think it will, I think the solar should be one of the first names you turn to, one that you shouldn't you turn away from just because of yesterday's disappointing afternoon action. But TSL, YGE, another example. YGE held up great. It didn't go negative at all below the low of the day from the morning. And you take a look at FSLR. FSLR a little bit weaker yesterday, a little bit more of a breakout failure, a breakout above a pivot failure. But I think TSL, YGE, those are the better names here, the ones you could potentially get bigger percentage moves from.
And Walter Energy had a nice 3-day rally, but even though it is still somewhat at lower levels, so it's now a good time to buy, actually. Yeah,
generally we try to be trend followers. We try to be, buy high, sell higher type of traders, but those opportunities aren't always the most compelling, aren't always the best risk-reward scenarios in the market. And I know Mark Sperling is an example of someone on the T3 Live virtual trading floor who he trades a diverse set of trade ideas. He looks for laggard names. He just has just his experience and his intuition. It gets him so far in terms of identifying these names that are a little bit beaten down, that perhaps have a high short interest that could potentially rally. And Walter Energy is an example of that. If you take a look at the chart, Walter, you go out to the monthly chart, the stock's been absolutely decimated. Energy stock, it was in early 2011, it was a $140, $150 stock. Now it's trading around 15, but we zoom in slowly, you go to the weekly chart, you can see lower level wedge pattern forming there. And then we talked about it yesterday in the morning call too, and this is just a follow-up to that, is we talked about how it was bumping into the upper trend line from this mini wedge pattern that formed in September. And yesterday we got a really nice percentage move in Walter, one that I think with that heavy short interest could continue to squeeze.
And amid the ongoing debt deal drama, we did see the VIX up 6% yesterday. This could be another indication that investors don't think a default is likely. Yeah,
I'll give a shout out to Rob Smith on this VXX. If you go in the VTF, you'll see Rob Smith always sits short the VXX. That's because the VXX is a flawed ETF. It's a flawed instrument that's built to go to zero based on the adjustment that takes place in the ETF holdings overnight. The S&P, something like it would have to go to zero over the next decade for the VXX to end up going higher over that period of time. And it's just something that anytime you get a really big spike in the VXX, especially something like this debt deal situation that, it seems like the consensus is that it's going to get done. When you get a 6% jump in the VXX, I think that's a great opportunity to short. You keep very tight risk parameters on something like that because given how beaten down the VXX has been, it can explode if something explosive does happen with this default situation. But keep tight risk parameters, but it's something that I think you look to fade any significant strength in the VXX.
Well, markets have been pretty erratic and choppy during the trading sessions as of late, so would you brace for that to remain the same today?
Yeah, it's like I talked about yesterday. A lot of people are talking about the possibility for a sell the news type situation when a deal does get announced. I think yesterday's downside action sort of takes that a little bit off the table, makes it less compelling because we're not going to be closing on highs leading up to the deal. But I still think it's a possibility. I think ultimately what we're going to be doing is just kicking the can down the road even if we do come to a deal. And these debates just getting more and more contentious every go around. The fringes of the different parties get more emboldened by these debates. Every time they happen, they see an opportunity to seize the spotlight and potentially make their case as the next president and the next agent of change in our government. So ultimately, I think these issues with the government are still going to be impeding the market. And I think, is it a case of do we ignore them like the drunk uncle at Thanksgiving, or do they become increasingly frustrating to the point where people start exiting the equity markets a little bit for fear of potential volatility? But something that will be interesting to watch over the next few days.
And that's your morning call for this Wednesday. Happy trading. Have a great day.